Most traders think they've mastered smart money structure, but without the right confirmation entry, they're walking straight into traps. Today, I'll show you how to spot the exact moment to strike before the market leaves you behind. So I've got some candles I've marked out again. We're going to walk through this step by step, teaching you the exact process, how we use that smart money structure technique, and then how we look at applying our areas of supply on this chart and an area of imbalance, and then how you can understand the confirmation entry later in this video. But if you have any questions and you're not sure about the use of this smart money structure, do leave them below. I reply to all questions. And of course, if you want to take your trading to new heights and start capturing trades like you see within the pro community, then do check out the 90-day profit trading system. There's a link below in the description of this video. So first, let's talk about the smart money structure. When we're looking to use this structure with a bearish trend like we can see on the chart, what we're looking for is where we see price closing above a previous candle's high. What do I mean? Let's go through this step by step now. So once we identify this bullish candle here, closing above the previous candle's high here, this validates this low here in the market as what we call a weak low. We're in a bearish trend. This is a pullback and we're expecting a continuation to downside towards the weak low. Now, once we see this candle wicking through, this is not a valid breaker structure. We need to see a body candle closing through like this one here. And again, if you're not sure on how we use this market structure technique, do watch the next video coming up. I'll go through it step by step. So once we identify this as a valid breaker structure, this will give me a valid high in the market. And this is classed as our strong high in the market. And it's where we can now look for price to pull back to this area where we'll start to think about marking out our areas of supply, areas of imbalances. We'll go through that in a moment. So what we now need is a valid low in the market. And that isn't created until we see this bullish candle closing above this previous bearish candle's high. That gives me this low as a valid low, which is then our weak low. We're expecting price to continue to run that low in the future. So that is the quick breakdown of what we're going to look at today. Now, if we now go through it step by step in more detail, when we have this candle here closing above, this candle closing above this previous bullish candle's high, we can then mark out this as a valid low in the market. And we'll mark this off as a BOS, understanding that the BOS stands for break of structure once we see this candle's body closing through this level. That validates now that we can look for a previous high. And again, using the technique of understanding the smart money structure, we look for this candle, it closed above this previous candle's high. That validates this as our strong high in the market. So now we have our high marked, we now need to mark out that low. And the way we look at marking out our low is we look for the same sequence we just saw here. We're looking for a candle to close above the previous candle's high. And that happens on this bullish candle closing above this previous candle's high. Once we get this, we can mark this low out as our weak low in the market. So now we have what we class as our trading range. And that is from this high to this low in the market. Once we have our trading range, we know our directional bias, which is down, it's bearish. We're now looking for that pullback to our ideal area for another potential sell in the market. Now, when we're looking for our sells, how do we look for the best location? Well, to start with, we're looking for price to come back above the 50% area into what we call a premium zone in the market. Once price pulls back into this area above the 50%, then we can look for a potential trade out of what we call an area of imbalance in the market or an area of supply. So marking out an area of supply, what we're going to look for here is where we see price dropping from the high, showing us that sellers have taken control of the market. So right here, we can identify this last bullish candle. We see this bearish candle closing through the low, and that's the start of the drop in the market. So that becomes my area of supply. From the low of that candle to the high of that bullish candle. This then shows me the drop to downside, and it creates what we class as a fresh supply zone. So as well as an area of supply now, we can also mark out what we class as an area of imbalance. Now the imbalance shows you an area of liquidity in the market where there's also leftover orders, and they very often will need to be filled before the market will continue its direction. Now that is marked off from the previous candle's low to the next candle's high here, which shows you that this bearish candle to downside has a leftover imbalance in this smaller area here. Basically means that price has not wicked yet into that area. And we can drag this across on the chart to where price comes back to this area and wicks through. Now, once you see price coming back to fill the imbalance, very often this will sit below an area of supply or above an area of demand. And we're looking for price to hold at this area to wick into it. Very often the 50% and the higher of the zone on a sell is where we'll see price hold at that area, and then often into the area of supply when we look for an entry to sell the market. Now, if you were looking for a simple entry here, you could use what we class as the set and forget entry. You could look for a sell basically at the area of supply to then run for the low in the market. Now you can see we've got over a 2-hour risk to reward on this trade using a set and forget. Now, as long as you're looking for 2 to 3 hour on your trades, that is the best risk to reward you should be targeting. This would be acceptable for me to take this trade, but we can look to confirm this supply, this area of imbalance, by using the confirmation entry. Now, using a confirmation entry is not only going to help you to find a higher risk to reward trade, it also confirms that area of supply had orders within that area and has turned price back bearish to continue to run for this week low. So as you can see, you can look for trades in a couple of ways. This is just quickly showing you how we read that smart money structure, marking up our levels, where we have our breaker structure, our current strong high in the market, the week low, where we've marked out the area of supply and imbalance. Once we're seeing price pulling back to the area, this is where we can now decide to either take a set and forget entry, or we can look to confirm it with a confirmation entry. Now, this video is more about the confirmation entry, so we'll now go over and look at how we can use the confirmation entry to our advantage. So when using the confirmation entry, we will look at using 2 time frame approach. Now, as you can see, we have here is a 15-minute time frame on this move in the market with a 1-minute potential entry. Now, there are 2 ways we can look at a confirmation entry. Today, we're going to look at really what I class as a fractal reversal entry, which gives you a much faster entry when we only see short pullbacks like this. Now, the traditional way of looking at a confirmation entry is when we see price pulling back into an area of higher time frame. Let's say this is an area of 15-minute supply. You're looking for price to shift bearish out with a 1 minute to leave a new supply on a 1-minute time frame where price pulls back into to start to take your entry and then continue with the reversal out. That is how we look for the normal confirmation entry out of a higher time frame. And you're always going to use 2 time frame approach with this method. So when we do see price pulling back to our area of supply here, we've got it circled, we're going to look at price action within this area now, which is what's going to happen on the lower time frame of the 1 minute in this area of 15-minute supply. So this would be our 15-minute area of supply, this zone here. When price pulls back, we can first look at the smart money structure here. We have this candle closing to downside. That gives you a valid high in the market. And again, if you're still not sure how you mark this up, the next video coming up, the end of this video, we'll go through it step by step. Once we then have this candle bullish closed through this high, that gives you a valid break structure using smart money structure. And it also gives me this is a valid low. So we have this all confirmed. But we're going to look at actual concept today, which is classed as a fractal structure and a fractal reversal. This becomes a fractal reversal level. When we use fractal structure, we're not concerned so much about the body close like we see here on this higher time frame structure. We're just looking for a wick through the structure. And this is how you can apply this to a confirmation entry to make sure you're not missing potential trades and to give you a much higher risk to reward. So once you see price on a fractal structure, you're just looking for a candle to wick through that level. Once it's wicked through this structure, it gives you a valid area of 1 minute supply here, marked off this candle where we see the push away on that bearish candle. And very often with a fractal structure entry, you will see a 1 wick up into that supply for your entry for a fast entry to the downside. You can see here where we'd see a previous area of structure broken to downside, leaving that area of supply for an entry, look for a full swing pullback for an entry out to downside. On this occasion, all you see is a push down, a quick pullback on a 1 candle pullback, wick into the supply continuation. And that is the difference between those 2 types of confirmation. This will help you to identify on very short pullbacks like we see here for a quick entry to target that week low on the 15-minute for a very good risk to reward and potentially stop you missing out on good trades. Hey traders, we'll get back to the video in a second, but if you're tired of second guessing trades and struggling for consistency, listen up. Danny was just like you, stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This system gives you everything you need to trade profitably. Step-by-step strategy, personal support, and lifetime community access. Spots are limited and we only take a handful of traders each time enrollment opens. If you're serious about finally seeing results, click the link in the description now before it's too late. Now back to the video. If you're still struggling with understanding that smart money structure technique, you want to learn it more step by step, then this video here is going to help you to understand that. It's coming up next.